Now we will go over some chapter and exercise problems, and we mostly will focus on our capital list part because you will have some sample problem or these type of problems on your exam. So let's read the problem. I just opened my ebook and I hope you all have your hard copy of your textbook. So it's from page number 798. So the first question says that a city government has obtained an asset through a capital lease. Which of the following is true for the government-wide financial statement? So you need to think of this part, government-wide financial statement. So what we discussed at the beginning of my PowerPoint slide, and we use the example of the track, and we discussed it that for the government-wide financial statements, it's the capital lease recording is just like the for-profit entity, like for a regular business, and they need to fulfill all those criteria. If those 4 criteria are met, then any local or state government needs to record it as a capital lease, and that would be kind of treated just like a for-profit or regular business. So I'd say the answer is here, number A, because it's just like the for-profit. That means they will say track as an asset, and they will also say report lease obligation, just like a liability. Capital lease obligation will be a liability, and that's kind of the regular lease, capital lease accounting that you also know for for-profit corporations. Now let's see here. It says the other options, that the city must report an other financing source, and the city must report an expenditure. Remember here, this B and C, these are not correct because these are for fund financial statements. Remember, for fund financial statements, this type of transaction is not recorded as a, it doesn't create neither any asset nor any liabilities. Rather, we actually debit the present value of those all lease payments as an expenditure at the beginning, and to reflect the similar amount on the credit side, we use another account which is called like other financing source. So these two are actually for reporting fund financial statements. Option D, it says that recognition of depreciation is optional. No, I wouldn't say this one is correct, because for government-wise financial statement, when you are looking at the whole picture of any state or local government, you will treat the capital is just like the for-profit company. And for the for-profit company, we actually create the asset. Once you know the asset value and know its life, then definitely you need to record the depreciation. Now let's see question number 2. Question number 2 says that a city government has a 6-year capital lease for a property being used within the general fund, and then minimum lease payment is total $70,000 starting next year, but have a current present value of $49,000, which is the total amount of expenditure to be recognized on the fund financial statement over the 6-year period. So you have these options, and remember here we are talking about the general fund. So general fund is a governmental fund, and we actually report this governmental fund under the fund financial statement. And we just discussed that for fund financial statement, we actually don't record any assets or liabilities. So what we do, we actually show all the present value of their future lease payment, and we show that present value as an expenditure, and we create one special account to reflect that amount, and we actually credit that account. We call it other financing resources. Let me show you the PowerPoint slide that we discussed it here. So here the present value of that track example, they're gonna show it as an expenditure, and then later they will actually credit this account, which is other financing sources, and they have to pay installment every year. So that installment they will plain and simple, they will record as an expenditure. And since they're going to pay cash, they will credit cash. So now here it says that what is the total amount of expenditure that they will be recognized on these fund financial statement. Remember, they do two expenditures. One is the present value of this future payment, which is here $49,000. They recorded at the beginning of the lease contract, and then every year they actually record all those installment payment as another expenditure. So that means this is their total future payments, lease payments. So they're gonna pay it with maybe, like, if it's annual, then 6 annual installments over the 6-year period. So these will be their another expenditure, total another expenditure for these next 6 years. That means the total amount of expenditure here under fund financial statement will be this initial present value, which is $49,000, and this total, which they're gonna pay over next six years. That means if you add this, the total expenditure will be $119,000. Now the next problem here, you will see it's the same problem, but it is talking about another account, and which is this other financing resources. I just want to repeat that at the beginning of the lease contract, they will show the present value of those all future payment as an expenditure. And of course, expenditure means it's a debit account. And then on the credit side, to reflect that amount, they will record this account, which is called other financing resources, and that they will do at the beginning of the year. So that means for the over 6 years, that will be the only recording. And the question is the same question. It says what is the total amount of the other financing resources to be recognized on the fund financial statement over this 6 years period. And here this will be the present value, which is $49,000, and they will do it at the beginning. Now let's do number 4. Number 4 says that a government has 9 years capital lease for property being used within the general fund. The lease was signed on January 1st. Minimum lease payment is $90,000 starting at the end of the first year, and present value is $69,000, and the installment they're gonna pay is $10,000. Interest rate is 10%, and the first payment is made on December 31st. That means they pay at the end of the year. Which one of this recording is correct? So now they actually provide you like the two statements conditions. One is the government-wide statements, and another is the fund financial statement. Remember, for government-wide statement, we treat it just like the for-profit corporations. That means we record the asset and we record the liabilities, capital is obligation, and whatever the remaining amount of this obligation, you have to calculate interest expense. But on the other hand, for the fund financial statements, you don't need to calculate any interest expense because you don't have any obligations or liabilities. Like capital is what we do for government-wide financial statements. So if you look at government-wide financial statements, you need to record the interest expense. And what will be the interest expense? So we usually calculate the interest expense based on the total amount of your obligations or liabilities. So here they actually didn't make any payment at the beginning of their contract. They made their first payment on December 31st. That means they actually owe the whole amount, $69,000. So from the very beginning and just at the end of this year, they need to calculate the interest expense, 1 year interest expense on this whole amount. And that interest expense is 10%. So they will calculate the interest expense on this whole amount because they didn't pay any part of their obligation yet. So for the whole year, they have to record the entire amount of their interest expense, which is very simple. 10% of $69,000. 6,900. So looks like the possible answers are number B and number D. Now let's look at our fund financial statements. So again, fund financial statements, it actually does not record any assets or obligations or liabilities, and they don't record any interest expense. Right, so here what they do when they're gonna make these installments, the entire amount they will record as an expenditures, and they will credit cash. We can take a quick look again for our fund financial statements. This is actually our fund financial statement example. So $10,000 that was our installment, so the entire amount they will show as an expenditure. They don't record any amount here out of this, any amount here. So now what are the answer options? So answer options is expenditure. Yes, all three have this expenditure, but they will show the entire installment as their expenditure, which is $10,000. This is the annual payment. So the answer option is here D. Now let's see the next one. Next one is city government has a 9-year capital lease for property being used within the general fund. Again, general fund is a governmental fund that we report in our fund financial statement. I'm repeating, fund financial statement, for fund financial statement, and we don't record any assets or liabilities. We just show the entire present value as an expenditure at the beginning, and all those installment or annual payments will also be shown as an expenditure. So now it says that the lease was signed on January 1st, 2015. Minimum lease payment, this is the total amount of all those annual payments, $90,000. Present value is $69,000 of those future payments. And then annual payments is $10,000. Interest rate is 10%. It's kind of the same example. What liability is reported on the fund financial statement? Do we record any liabilities? No, we don't record any assets or liabilities. That means the answer will be 0. Now let's see number 6. Now let's see number 6. Says that a city creates a solid waste landfill. It assesses every person or company that uses the landfill a charge based on the amount of the materials contributed. So they are actually charging the people who are using this landfill. So in which of the following will the landfill probably be recorded? So remember, when this type of governmental entity, any city or state, they charge fees, these type of they are kind of doing like for-profit business type of activities. So if they do this type of like business type of activities, it is actually under the proprietary fund category. So the broad category is the proprietary fund. Now if you look at these answer options, first it says general fund, and then it says a special revenue fund. So if you remember from chapter 16, basically general fund and special revenue funds, those are actually not proprietary fund. I know it's a little bit difficult because you have like so many funds, so I would suggest you can make a chart of it. If you make a chart, then it would be easy for you to see all this. So these first two funds, general funds and special revenue funds, those are actually under governmental fund. Because I just want to recap what you learned in chapter 16. One, any governmental entity state or local government, they prepare two sets of financial statements, right? So one set is their government-wide financial statement, another set is their fund financial statement. So government-wide financial statement is kind of the whole entity, entire entity, and it kind of focus more like long-term financial position of the firm, and it also follows like accrual accounting. On the other hand, fund financial statement, it's basically for reporting any like individual government activities, and it's kind of current or short-term focus. Basically they want to show their current financial resources. So under fund financial statements, you will see like three categories: governmental funds, proprietary funds, and fiduciary funds. So governmental funds, of course, if they have any type of activities that related to serving the public, then they include those under governmental fund. And that under fund, that governmental fund, there are several type of funds. They actually have five categories: general fund, special revenue fund, capital project funds, debt service fund, and permanent funds. So here these first two funds are under governmental funds. Now if you look at the proprietary funds, that proprietary funds is basically when the governmental entity actually does any kind of business type of activities. They are charging fees, they are providing service, charging fees, making some revenues. So those should be under proprietary fund. And under proprietary fund, you will see there are several types of funds. So here next two options are under proprietary funds: internal service fund and the enterprise fund. So here basically for both type of funds, the activities that are recorded, that means governmental entity is providing some service and they are charging fees. But the main difference is that for internal service fund, they actually provide service and charge fee to another governmental department within their entity. That's why it's called internal service. So when they provide service and charge fee within that entity to another department, that will be reported here, internal service fund. But if any type of activity that involves like they are providing service to the externals or to the public and they are charging fees, then that should be here under enterprise fund. So here they says that they actually charge it for every person or company who uses that landfills. That means it should be under this enterprise fund. Now let's see another landfill examples, and these next three problems are based on this information. The city starts a solid waste landfill that they expect to fill over a 10-year period, and at the end of the first year it is 8% filled, and at the end of the second year it is 19% filled. Currently, the cost of closure and post-closure is estimated at 1 million. None of the amount will be paid until the landfill has reached its capacity. So now, which of the following is true for the year 2 government-wide financial statement? Now, if you recall, we discussed this exactly same problem when we went over our PowerPoint slides, and I can show it to you. So for government-wide financial statements, they need to see what percentage of this landfill is filled. That means that portion of their expenses incurred, and they need to record as an expense, and of course then they need to show it as a liability. Now if there is a contract that they will every year they will make a payment, that will reduce a portion of their liability. But if there is a contract that they're gonna make the payment at the end, that means when the landfill will reach its capacity, then their amount of liability will be accumulated. So now here it says that here in year 2, which statement is true? So let's go back to year 1. Year 1, when 8% is filled, that means 8% expense is incurred, and they need to recognize that expense. And of course, they need to consider both the closure and post-closure cost. So it says that the closure and post-closure cost is $1 million. That means during their first year or at the end of the first year, when they finished 8% capacity of that landfill, they have to recognize or need to show that portion as an expense, and since they are not paying any amount and as a liability, so 8% of 1 million is $80,000. So at the end of the year they will show that $80,000 as an expense, and of course it's a liability. Now, since they haven't paid anything, those liability will be carried forward. Those are unpaid liabilities. But we actually close expense accounts, right? Now, when it is second year, and the end of the second year, 19% is filled. Remember, 8% they already recorded or recognized those expenses. Now, during the second year, they need to show these difference, the incremental portion of that landfill, that after 1 year, at end of the 1 year, what extra portion of that landfill was filled. That means the difference is 11%. So here during the second year they actually used basically 11% portion of that landfill. So they need to record that incremental portion that they used during the second year. So that means they will record this expense, 11% of 1 million, which is $110,000. So they must need to record this expense, $110,000, and of course they will show that portion as liability too. Now let's see the answer options. Both expense and liability will be 0? No. So we can cross it out. Expense and liability will be 110. Well, it's true. I would say it's only for the second year. But remember, they haven't paid any portion of their liabilities. So the cumulative portion of their liability will be their first year's liability plus their second year's liability. So first year they already have these $80,000, 8% of that landfill. So this liability plus second year's $110,000. So both two together will be $190,000. So answer C is the correct answer, that the expense will be $110,000 and the liability will be $190,000, since it said that none of this amount will be paid until the landfill has reached its capacity. If they make certain like annual payment, then we could reduce that portion from their liabilities. Now let's see the next question. It says that if the landfill is judged to be a proprietary fund, what liability we have to record at the end of the second year? Now remember, if you record it as a proprietary fund, that means, what do you mean by proprietary fund? Proprietary fund, one example we just discussed when we did problem number 16. So for this proprietary fund, they actually charge fees, and that could be from like they could provide any type of service within their entity, or that could be from any outsiders. They actually do business type of activities, and when they do this type of proprietary fund activities, and that should be included under their fund financial statements. But remember, here if a solid waste landfill is maintained as a kind of enterprise fund, that means we assume that the other people or other company will use that landfill facilities. You have to record it as you just shown it for that government-wide statement. That means you will follow the same steps. You will record those liabilities every year based on the percentage that they use, and the answer will be the same. That means in first year they have that liability $80,000, and in second year they use another 11%, and all together so far they use 19%. They haven't make any obligations, so all together they use 19%. So their total liability at the end of the second year will be $190,000. For question 9, it says that if the landfill is judged to be a governmental fund, what liability will be reported at the end of the second year? So on your fund financial statement, remember, fund financial statement has 3 broad categories. One is the governmental fund. They actually record all those activities related to serving the public. and these all are service oriented, and actually there are different type of funds under governmental funds such as general funds, special revenue funds. On the other hand, another broad category under fund accounting classification is the proprietary fund. And proprietary fund means when they are kind of doing business type of activities, charging fees, either from another unit or from the public. Enterprise fund is one example. And also they have another type of funds which should be included in their fund accounting, which is fiduciary fund, and they actually record if those type of activities, any resource, if they held it for any specific issues, for others such as trustee. So I know we have like different categories classification. Again, it will be good if you can make a chart under all these categories so that you can remember all those. Now it says that if the landfill is judged to be a governmental fund, what liability will be reported at the end of the second year? So governmental fund means it's kind of like public service. They're providing the service to the public. They're not charging any fees, and usually they will show it in their general fund categories. And although they have like, it's a huge liability, because when the landfill will be fully filled, then they have to pay all those post-closure amounts. But basically, this type of governmental fund, especially for the general fund, they actually show the current financial resources, and here their amount will be limited to their annual payment, and they actually show it as an expense. And whatever they pay every year, if there will be any payment conditions, and then they were paying cash, they will also show cash as a credit part. But since they are not paying anything, they will not record any liabilities for this governmental fund, which usually may be considered as one type of like general fund. So I'd say if it's a governmental fund, then the amount of liability will be 0.